You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
This is the Options Industry Council's Wide World of Options. Before we start today's show, listeners should know that options involve risk and are not suitable for all investors. Individuals should not enter into an options transaction until they have read and understood the disclosure document, characteristics and risks of standardized options, available by visiting the OCC.com or by contacting your broker, any exchange on which options are traded, or the Options Clearing Corporation at 125 South Franklin Street, number 1200, Chicago, Illinois, 60606. The Options Industry Council is an industry resource provided by the Options Clearing Corporation, collectively OCC. Any strategies discussed are strictly for illustrative and educational purposes only and are not to be construed as an endorsement or solicitation to buy or sell securities. Commissions, fees, margins, interest, and taxes have not been included in any of the examples used in this show. These costs impact the outcome of all stock and options transactions. Consult your tax advisor about any potential consequences. OIC was created in 1992 to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options, and the Wide World of Options radio show is one of several resources investors can utilize to learn more about options. Other resources OIC offers include webinars, articles, and self-guided options-related coursework. For more information, check out www.optionseducation.org. Now, here's your host, Mark Benzaquen.
Hello, everyone, and welcome to another episode of OIC's Wide World of Options. I'm your host, Mark Benzaquen, and for today's episode, we're going to take the next step in our discussions on pricing by taking a look at the Greeks, which are theoretical values that help us determine how an options price might change when one or more pricing inputs might change, such as stock price or implied volatility, for example. And as my colleague and fellow OIC instructor Roma Colwell will be presenting on this very topic this month, who better is there to lead the discussion? So, Roma, thanks for taking the time to join me today, and welcome back to the podcast.
Thank you, and happy to be here.
Excellent, Roma. So let's go ahead and start at the beginning. And when it comes to Greeks, for someone new to options, how would you explain what Greeks are and what they might mean to investors?
Yeah, well, let's start with the model, right? The Black-Scholes or the Cox-Rubinstein model, which really takes all of the inputs, which are, the expiration date, the underlying, we have dividends, all of those components go into the model.
Stock price, strike price.
Right. And then there's an output that comes out with it, which is the value of that option.
Okay.
And so really what you're looking at is, one, what that value is, and two, what happens to that value if any of those components change.
Okay, so let's say we put all those inputs into a pricing model. It spits out an options value of, say, $3 based on those inputs. And then now we're trying to gauge if one of those inputs change, what happens to that $3 price.
Right. Or the other side of that is what happens if now it's a $3.50 price.
Okay.
Which one of those components changed?
Oh, so back testing.
Right.
Or back solving.
Right.
Okay.
And typically that's how you kind of move into the volatility. What price is volatility is you'll use the current price and back into that. And then
Okay. And then, so how do the Greeks fit into play?
Well, the interesting thing about the Greeks is there's multiple ways you can use them, and we'll just start with the delta, right? Which is basically the equivalent of one, how much what that value is compared to the underlying. For example, it's typical that the at-the-monies are a 50 delta. Now, you can look at that in a couple of ways. You can say for every dollar move, that particular option is going to move 50 cents.
Okay.
Right?
It would be expected to move 50 cents for every dollar in the underlying.
Right, exactly. So you can look at it that way, or you can look at it, which a lot of retail investors do, as a probability of it being in the money at expiration.
Okay.
So if I'm looking at an at-the-money 50 delta call, that just tells me that I have a 50% chance of that option being in the money. The other thing to consider is calls and puts have a relationship. So if that call has a 50 delta, then that put has a 50 delta, right? So you have a 50 chance of the call being in the money, meaning the stock going up, or you have a 50% chance of the stock going down and that put being in the money.
Okay.
So that is one way to use it. And I think that more importantly is when you're looking at out of the monies. So if you're looking at an out of the money option, typically those are going to be less than 50 delta.
Right.
Right. So if you're buying an option that's, $10 out of the money, you can look at that delta, which might be 20, and you know that it has a 20% chance of being in the money, or conversely, an 80% chance of being out of the money.
Right. And when we talk about in, at, or out of the money, we're talking about two things. Number one, we're talking about at expiration. And we're also talking about when we talk about in the money, for example, there's a difference between being in the money and being profitable. So if you pay, for example, $2 for an option and it finishes in the money by 20 cents, that contract's going to be worth theoretically 20 cents, even though you paid $2. So even though it finished in the money, you still lost on the contract. But I like your I like your idea of using delta as probability of that contract finishing in the money, because it does give investors a way, when you're talking about out of the money, for example, that do I really want to spend money on this contract if it's only got a 20% chance, because it's got a 20 delta, of doing what I want it to do, of finishing in the money at expiration.
Yeah.
So those are I know that those are two primary definitions of delta, and delta is typically the most looked at, I guess, or one of the most looked at of the Greeks. Another popular Greek that I think is fairly easy to understand and is utilized greatly by investors is theta, right? Tell us about theta.
Well, theta is the rate that the option is going to decrease in price. So if you buy an option, like any kind of contract, like if you're looking at insurance, if you buy an insurance policy a year out and then 6 months later you want to get out of that insurance policy, you only have 6 months left. And so that insurance policy is not going to be valued at the same price. And it's the same with options. So options all are decaying products. That theta tells you the rate of that decay. So if I'm looking at an option that's going to expire in 6 months and the theta is, 20, then it's going to decrease by 20 cents to the next day.
Yeah.
So that's where it's super important in both ways, whether you're long it or whether you're short it. If you're short it, that's just money in the bag, right?
Right, it's working in your favor.
Right, and then if you're long it, just know that between now and expiration, there's a good chance, if nothing happens, that theta is going to tell you how much that option decayed by.
Yeah, I always like to kind of look at it that when you're buying an option, you need for something to happen. You need for the market to go up or down. You need for implied volatility to change, for example. But you need something to happen in order to basically recoup the premium that you paid for that contract. When you're selling options, you want the opposite to happen. Ideally the stock doesn't move, or things go in your favor, something like that. But when you're paying, you're buying time right, for whatever your forecast is to come true. As that time frame shrinks, as we approach expiration, now you've got less time for whatever you need to happen to actually occur. So therefore, because that time frame is narrowing and shrinking, the value of that contract is shrinking as well. And that's the time decay. That's the price erosion that you're talking about from day to day. There's less time for good things to happen. So therefore, that contract is worth less. And that's represented by theta.
Absolutely.
Excellent.
Explained perfectly.
And that's the one that, those two primarily for me, delta, the rate of expected rate of change for a contract based on a $1 move in the underlying. That's fairly straightforward for investors to understand. Time decay, the value of that contract is going to erode a little bit each day. That's fairly straightforward, I think, for investors to understand. The thing that I think people have a hard time wrapping their head around with the pricing input of implied volatility, and that goes hand in hand with the Greek vega. So why don't you tell us about that, if you would?
Well, that implied volatility number is, basically the price in some ways that you're paying. Now, if you're a market maker, market makers only trade volatility, right? They're not particularly concerned about the exact price of an option, but what they're concerned about is what is the volatility number. So if you were to ask a market maker where they bought something, they would say, I bought it at
a 20 vol.
At a 20 volatility, right?
Not that I paid $2 for it.
Right.
I bought it at a 20 vol.
They probably couldn't even tell you what the exact price is, but they could tell you what the volatility is. And as a retail investor, the importance of knowing what volatility is to know whether or not, historically, if you're buying cheap or expensive volatility, because that volatility is what is going to make that particular option, more expensive. So if there's more, think about this, if there's more volatility in the marketplace, there's more risk. Volatility is a component of that risk. So if the risk in the marketplace is, astronomical, guess what? The prices of that premium are also going to be astronomical. And if there's not a whole lot going on, not a lot of volatility, there's everything is pretty smooth, then the price of those options are going to reflect that quieter marketplace. So as a retail investor, I always like to know what price, what volatility am I buying it, only so that I know whether or not I'm buying an expensive volatility or cheaper volatility. The flip side of that, usually if I'm buying expensive volatility, it tells me there's potential in the marketplace, right? That there's a movement there that could potentially be profitable.
Right. And when we're talking expensive versus cheap, again, we're not talking the price of the option. We're talking volatility relative to where it's been before, correct? Right. Okay. So a 90 vol, for example, could be cheap or expensive depending on where that volatility level has been in the past.
Right.
Okay. Excellent. Thank you. Now, the other two Greeks, we've got gamma, which relates to delta. It's how much your delta is going to change with a $1 move in the underlying. And then we've got rho. It's another Greek that you're going to be talking about, which is interest rates. And typically only relevant necessarily when either in a higher interest rate environment or if we're talking a long time frame option, right? A year. And I shouldn't put a qualifier on that, but an option that maybe lasts a little bit longer than a short-term contract, let's say, to cover the base there. And those are topics that you're going to be talking about in your two upcoming March webinars. I know the first one is going to be delta, gamma, and theta, I believe. And then the second one is going to be vega and rho. So you're going to be covering all 5 of these major Greeks with your upcoming March webinar. So listeners, I definitely encourage you to go to our website, www.optionseducation.org, to register for Roma's 2 upcoming March webinars, which I know are going to be terrific. Roma, let's shift gears for a second and get away from talking about the webinar. Let's talk about you. when I had our colleague Ken on last month, we talked about getting started in the business, first impressions of the trading floor, for example. Tell me about how that was for you. So picture this. You walk onto the trading floor for the first time. What do you see? What do you smell? What do you hear? What are your thoughts?
Yeah, that's such a good question. I remember when I first walked on the floor thinking to myself, what have I gotten myself into?
Well, and you were probably one of a handful of
Exactly.
female market makers.
Right. So I was on the Pacific Stock Exchange, and having just graduated from college, I have a math degree, so I thought, well, they're trading math all day long,
Right.
so I'm going to go look into this.
I'm going to take advantage of these
Right.
boys.
So I get on that floor, and literally there's 500 people, and there's, like you said, maybe a dozen women on the floor. So that was my first impression,
Yeah.
and my second impression, of course, is all the yelling and screaming. Now, that component of it, I was like, woo, this is freaking cool.
I love this.
This is going to be really neat. And then my first job was a quote operator. Mm-hmm. Where they stuck me in a pit, and in that pit, there's 30 guys. There's no women in there. It's just me. And my whole job is to enter in the bid and the offer. And the only way you can determine what that bid and offer is to listen to them screaming at you all day long. And I just remember every day my dad and I would commute into work, and I would say to my dad, I think today's the day I'm getting fired. Because it was like a really difficult job. And I'll give you my next impression. So at the time when I started, there were no big groups. Everybody was a sole prop. And so they're just responsible for themselves, which means they don't care about anybody else.
Right. Every man for themselves.
Right. So they all wore trading jackets, and most of them probably had not washed them in 3 years.
If ever,
right? And hygiene wasn't that important to them. So for all of you that, have been an athlete, right, you know what your sweat smells like, and it's reasonable. But if you have perspiration from being nervous, it's a whole other level. So I remember being in these pits and just the smell alone, and you're just like, how do I tell them to take a shower?
Right. Well, and not only so, you're starting in San Francisco. The markets there open at 6:30 in the morning.
Oh, yes.
I know when I was working out there, I was in the office at 4 a.m. So, yeah, maybe getting up that early, taking a shower isn't necessarily your biggest priority of the day. So I get that, and I really appreciate those stories because I can definitely identify with that. So, Roma, thank you so much for sharing your information, sharing your anecdotes. And for listeners, I can't encourage you enough. Please go to our website, optionseducation.org. Register for Roma's 2 upcoming March webinars. She's going to be covering the Greeks in much greater detail than we had time for today. So make sure you register for those. And Roma, thank you so much for joining us today. I really enjoyed this.
Yeah, well, thank you for having me, Mark.
Oh, thank you. And now I want to transition to a different topic that we get asked often here at the Investor Education Desk, which is namely the processes, the criteria, the behind-the-scenes mechanics when it comes to listing options. And to do that, I want to welcome Dave Stuber, Director of OCC's Market Operations Team. Dave, welcome to the show.
Thanks for having me, Mark.
So, Dave, tell me, you are the Director of Market Operations. What does that mean? What is OCC Market Operations? What are their responsibilities? What's the role that your team plays? What does Market Ops do?
Let me try and be concise. We do cover a lot of ground, but let me give you an insight into an average week. We actually monitor for trade activity. So trading starts on Sunday afternoon and goes overnight and wraps up, Friday at about 3. So my Market Ops is responsible for making sure that the plumbing's in place, making sure trades are clearing, making sure that anything that pens or rejects, basically due to incorrect trade message, validation failure, something like that, sometimes these trades reject. We reach out to the exchanges and make sure that that gets corrected and sent back to us with valid information. We're also in charge of product setup. So that would be brand new products, vanilla equity options that get set up every day. We're responsible for that activity. And then we balance with the exchanges every day. We make sure that nothing's missing. We can't move on with our finalization processing until we make sure that every trade is received from the exchanges. So we balance with the exchanges, and then that kind of leads into our second and third shift processing, which is what we call our critical path. And that basically means that we're kicking off end of day jobs, preparing to roll to the next business date, and then figuring out margin requirements for clearing members, which leads eventually to margin numbers and eventually to the settlement amounts that we need to collect from each clearing member on each day. So I know that's a lot right there. So I'll pause and we'll move on to the next.
Yeah, that is a lot, and I like the plumbing reference that you used. So, really, you guys make sure that everything gets to be where it needs to go. You guys manage any new product that comes on and make sure that everything is available for traders. When there's a new product that is being listed, you guys make sure that traders have access to that come market open. And then you guys manage all of the various option series that are out there. Speaking of which, off the top of your head, any idea how many securities are available to, how many securities list options and how many open series there are on those listings?
I can give you some ballpark numbers. It's probably about 5,500 equity or ETF options listed at any given point in time. Mm-hmm. And we've really seen this ramp up over the last couple of years. I think just 4 or 5 years ago, there were probably about 4,000 option products. And so we've seen a pretty big increase. And it also, it expands the total number of series that are out there considerably. You add 1,500 new option products with fairly wide strike ranges, and you'll see a pretty big increase in overall option series. And I think that number is at about 1.5 million. And that's, in one call being counted and one put being counted would be a tally of 2. So that's up to about 1.5 million out there. And, I don't think we see that decreasing anytime in the near future.
Yeah, no, I would agree with that. So, So let me ask you, with managing all of those series and managing all the listings, et cetera, OCC isn't actually the entity that decides to list options, right? We're not the ones that decide that XYZ Corporation is going to have options listed. We're not the ones that decide which series, which expiration dates to offer, which strikes to offer, et cetera. That's on the exchange level, correct?
That is accurate. Yeah, we do have some monitoring in place, and we do oversee the operation. But in general, these are exchanges who come to OCC and request certification to list, whether it's a new IPO or just, a company that's gotten popular. The equity volume has gotten popular. The exchanges have fairly robust review processes and listing departments, and they're scanning for a couple things, really. They first want to see that a company is traded on a national exchange. That's a requirement. The next up is it has to have a price that meets a requirement, and a price history is helpful as well. So it needs to be over $3 in general to initiate listing. And then there's a couple other requirements that, are less, that I think investors are less familiar with. There has to be a total of 2,000 different shareholders and I think a float of about 7 million shares out there. So those are all requirements that the exchanges are reviewing. And before they come to OCC requesting certification, it has to meet those requirements. And what the exchanges do is they submit those certification requests to OCC. It comes in a window in our platform, and we review it for basic information like QSIP and symbol and make sure that it's accurate. We also make a couple other checks because we want to make sure it's a national exchange that it's listed on, and then we create the option product. Now the exchanges they police each other as well.
Dave, good information there. Thank you. What about, you had mentioned that you're also in charge of new products. What do you mean by a new product? Would that be just a new, like a new ETF or something different?
One point of clarification is we set these products up. So we control all the attributes that eventually will become this product. We have another group that actually does the kind of the vetting process. And what they do is they work with the exchanges to kind of fit their product into OCC systems. And, what that means is we need to kind of, kick the tires a little bit and see what this product's all about, whether it has any new processing components. Is there anything unique about it that where OCC might have to adapt our systems to clear and settle that product? So it's called our Participant Solutions Group. They circulate the information regarding the product, and they check with our risk groups, our quantitative risk groups, our market operations group, our membership group. They kind of survey the landscape and check with all the stakeholders and make sure that there's no processing changes that would need to exist in order for us to clear that product.
I got
And then when we get a final set of kind of product specs, that gets set up in advance, and we make sure that clearing members are aware of the product and can participate in external testing if needed.
Okay, excellent. Thank you. Let's, great information, Dave. I really appreciate that. Thank you so much. Let's get a little bit more personal now, if you don't mind. I know that you've been at OCC for a number of years. Myself, I've been here a little bit over 8. I think you predate me by a number of years as well. What's your background? How did you get started in the business? I remember that you were a market maker on the trading floor. Why don't you tell us a little bit about that?
Yeah, sure. So I started at the Board of Trade in the grain room, and I was collecting market data there. And this is about the time that the dot-com craze was blowing up, and they were drawing a lot of people over to the SIBO in order to learn how to trade options, and I was one of those. And I worked in a designated primary market for a while, which was executing stock orders for people trading, and then eventually started trading and kind of saw kind of considerable evolution within the industry. I think I think one of the first big changes was moving from single listed products where you would only see maybe a name trade on one exchange to now it trades on 17 different exchanges.
Right.
Another big change was the move from fractions to decimals, of course, which was gigantic because we were all well versed in adding and subtracting fractions, and so the change to decimals was fairly interesting. Then eventually we moved to pennies, and that made it a real struggle to find some edge on both sides, but provided great entry points for the customers. No longer having to cross wide bid-ask spreads in order to enter a position. So, and then there was also a lot of really memorable events being on a trading floor. I think I had positions during and I was on the floor for 9/11, which was very memorable and very chaotic trading. And then I think I mentioned that the dot-com craze blowing up. That it was a very exciting trading. And then I think finally the banking industry bubble that blew up in 2008. It was tough trading times, and I think liquidity dried up quite a bit. But it was a very interesting time to be on the floor of the exchange.
Yeah, definitely. And I think I got started right around the same time you did, 97. I was out on the Peak Coast for a bit when that multi-listing came up. And in my mind, the reason being is the San Francisco Exchange, or the Pacific Coast Exchange, I should say, had a lot of those .com listings, and all of the other exchanges at the time, it was the NASDAQ, the NYSE, and the SIBO. Obviously, they wanted a piece of that pie as well. So yeah, that was a very interesting time. I very much remember decimalization. I had just gotten sixteenths, memorized teenies as we called them, and then now all of a sudden we went to decimals, and I felt that I had wasted some time with that. But yeah, a lot of changes, since you and I have been in the business. How did you transition from the floor to OCC? What brought that about?
I traded off the floor for a couple years and realized that it was harder and harder to make edge, I would say, or theoretical edge on trades, and you became more of a position trader, which I had less experience with, and so I moved over to the OCC. I started in the investor services area, which was very rewarding, working with individual investors on. Without providing any trading advice, kind of giving them exposure to the potential risk rewards of certain strategies. And so I had a lot of fun doing that, and it was kind of well suited for me because I'd just been on the trading floor. So I was also, explaining how corporate actions worked, how they impacted options. So that was my first entry into OCC. Then I worked in our membership group for quite a few years, and that was, working with other industry professionals, kind of back office processing, kind of people doing the exact same work we did at OCC, but at different clearing members. And so that was fun and built a lot of great relationships in the industry. And then I moved over to our market operations group, and I've been there for about 7 or 8 years. And similar, we work really closely with the exchanges. It's a great group of people, and I've built a lot of good relationships across the industry.
Yeah, excellent. Dave, terrific. Thank you so much. I really appreciate having you here as a guest. Thanks for joining us.
Sure, Mark. It was great to be here. Thanks.
Very welcome. Ladies and gentlemen, that's going to do it for our episode today. Please visit our website, www.optionseducation.org, to sign up for Roma's webinars that she's going to be presenting for the month of March. Any questions that you have, be sure to address to our investor education team at options@theocc.com. You can also live chat with us on our website during regular trading hours. Dave, again, thank you for joining us. Roma, thanks for joining us as well. And ladies and gentlemen, thanks for tuning in. I hope everyone has a great day, and we wish you good fortune trading. We'll talk to you again soon. Thank you.
You've been listening to the Options Industry Council's Wide World of Options. If you have questions about anything you've heard on today's show, email options@theocc.com or visit www.optionseducation.org and chat with OIC's Investor Education Team. Interested in connecting with OIC on social media? Subscribe to the OIC YouTube channel, like them on Facebook, follow them on Twitter at options.edu, and follow their page on LinkedIn. Thanks for listening, and be sure to tune in to the next episode of Wide World of Options.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.